Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that it's up for you to watch. Now, if you're not on my free email list, scroll below this video and you'll see a link to join it. And then every single trading day before the opening bell, you get an email from me with my market commentary, thoughts, and links to the top stories of the day that you need to know about. Now, today, the stock market is up off the open, and it gapped up following the release of CPI data that once again showed a shockingly high increase in consumer price indexes over the past 12 months on an annualized basis. However, after the release of the news, many Wall Street stock market experts, economists came out and predicted that this is actually the peak of inflation and inflation will start to go down. And meme traders and Robinhood traders heard that and bought on the open with a lot of excitement. However, I want to show you in this video why these people are wrong and how to know when inflation actually is peaking out. And we'll also talk about the real reasons the stock market is up today. So let's step into what is going on so we can analyze today's market action together. Now, what you're seeing here is the article on the CNBC website that pretty much sums up the situation. Consumer prices increased 1.2% over the last month, which amounts to 8.5% annually. But core CPI increased 0.3% in March, below predictions that were made of a 0.5% increase. Now, this Morgan Stanley director of investment strategy, he said it's a red hot number, but the market's reaction for now suggests it's priced in. The big debate is whether elevated reads like this are the new normal, if we're beginning to see light at the end of the inflationary tunnel, which is a lot of people are predicting today, and they're dead wrong about last month being the peak of inflation. Dead wrong on that. So let's look at the market action. First of all, the S&P 500, as I'm speaking, is up 46 points. But it's important to note that the stock market has basically been pulling back now for 10 days. And it's oversold on the daily stochastics, which is the indicator at the top. It's an oscillator, and when it's below 20, it's oversold. So an update at some point was likely to take place, and I think it's happening now. That doesn't mean the stock market is going back straight back up. We're going to have some explosive rally. In fact, I think that what we're seeing is the rally that began in March peaked out. We're pulling back, and I think this is a short-term bounce, which will lead to bigger drops later. The reason why is because the lagging stocks are really breaking down. Things like the NASDAQ are once again trading weaker. Bitcoin is trading weaker. The ARK ETF is trading weaker. So really those things, a lot of things just bounced into the 200-day moving average and stalled out. That's the story, for instance, when it comes to Bitcoin. You know, it rallied up to the 200-day moving average, the green line, and stalled out. But, you know, an update today, you know, after basically 10 days of falling is nothing unusual. And the news has to always look for an explanation or a reason for people to buy, because they want people to buy, especially these people they interview. They're typically fund managers that are always long the market and are financially dependent on the stock market going up and people putting more money in the market. Brokers like Robinhood They want people to make more and more and more and more and more trades, always buying, because if they sell and get out, that's less trading activity. So everything's geared to hearing bullish talk. And frankly, when people are negative on the market, so to speak, which I consider, being bullish or bearish, just being objective. But when they are negative, people get angry. If it's a YouTube video, and someone new views it, they'll click away, and then YouTube sees that, then they won't show the video to other people, thinking, oh, this is not content people like. People want bull talk. They don't want to hear about, objective opinions. They want bull talk all the time. That's why if you type in Bitcoin right now on YouTube, what you'll see is a flood of videos of people pumping it to you, promoting it to you, talking technobabble. You won't hear about, why this Bitcoin chart looks like it's in a bear market. It's a downtrend and it's lagging the market. It's not something you want to be involved in. To beat the market and be a successful trader, you want to be in things outperforming the market. To beat the market, you want to be holding, buying, owning those things, beating the market. That's all it takes to beat the market. And that's what I'm all about. In commodities are doing that. Energy stocks are doing that. Gold and silver are doing that. And that's why I focus so much on those areas in these videos. But why are the experts dead wrong on inflation? Because look, the whole argument being presented by people today is typified by that CNBC article right here, is that inflation is peaked, therefore buy the rally. They say that's the reason for the rally, and that you need to buy it. Well, if their reasoning is wrong, then it shouldn't be used to make a buy or sell decision at all. So why are they wrong? Well, it's very simple. You have to understand that inflation is caused by rising commodity prices. Now, commodity prices can go up for various reasons. One reason is a currency goes down in value, so commodities go up against the currency. That was much the story, for example, in the 1970s. Now, what's been happening is that commodities have been going up against every single currency in the world. And that's because of the cycle we're in regards to the global bond market, which I'll discuss in a second. But remember, inflation is caused by rising commodity prices. That's why when energy prices go up, inflation goes up. Food prices go up, inflation goes up. Real estate prices go up, rent goes up, and so forth. These are all factored in consumer prices. So simple, commodity price inflation will go down when commodity prices go down. As long as commodity prices keep going up, inflation is going to continue to increase. So if we look at something like the price of wheat, it's going up. Wheat is higher now than where it was at its peak in March. So we know wheat has not topped out. The same is the case, for example, with corn prices. Corn prices are substantially higher now than they were a month ago. So this talk that inflation is peaking out is not evident in commodity prices. And it's not simply commodity prices, but if we look at energy stocks themselves, they are trading at a high. So energy stocks tend to lead commodity markets. They're going up. If inflation was peaking, gold and silver would be going down. The gold and silver this morning popped up, and they're up, over the past week. This is SLV, the most popular silver ETF. Here's the price of gold, up today. Mining stocks are also up today, up from where they were at the peak of March. So there's no evidence at all when you look at commodity prices that inflation is peaking. All these predictions and claims made this morning after the CPI data are nonsense. And the thing is, these predictions and claims have been made every single month. You've been hearing them over and over and over and over again, and they've been wrong again and again and again and again. Now, eventually, a broken clock like Cathie Wood will be right, but they will be right, and you'll know they're right ahead of them being right when you see commodity prices going down instead of going up. But until that happens, all this talk that CPI, PPI, inflation is peaking is incorrect. And it's been incorrect for over 12 months now, and it'll be continuing to be incorrect as long as this is the trend in the markets. So when it comes to listening to people's predictions, ignore them. I don't care who is making the prediction. All predictions are completely useless when it comes to figuring out what's going on in financial markets or the economy. Instead, stick to the trends, stick to the charts, and focus on them. And they are what guide you and help you understand what is really going on in these markets. So when we do that, when we look at something like the ARK ETF, what we see is something deep in a bear market, trading well below its 200-day and 150-day moving averages. And in a bear market, those moving averages, the green and red line on this chart, tend to become long-term price resistance. And when you're way below them, like the ARK ETF is, you're deep in a bear market. And when you're in a bear market, rallies are just temporary bounces, times to get out. So if I own the ARK ETF, I would use the recent rally to liquidate. I would use today's update to liquidate, and I'd take that money and move it into something outperforming the stock market, outperforming the S&P 500. For example, the SLV ETF, which is up year to date, while ARK is down year to date, while the NASDAQ is down year to date. That is what successful investing is all about. Now, when you look at the QQQs, we also see something in a bear market. We saw something that fell below the 200-day moving averages, almost down 18% about from New Year's to low March. Then it bounced back up into the moving averages. That bounce stalled out. We've come down the past 10 days, and we appear to be now making some sort of, up day, week bounce. Hopefully, we could turn into something bigger than just one day. That's all it is right now, and it's happening with that stochastics indicator at the top of this chart below 20, signaling, hey, this was oversold. So we're likely getting a weak bounce into the holiday weekend. I hope it can continue Wednesday and Thursday and carry over. But it's not something to be excited about in this news about, oh, these people predicting inflation's going away, therefore buy stocks. It's completely, wrong-headed, false reason to buy stocks. I think now is the time to always stick with what's outperforming the stock market, stick with those sectors. And right now, frankly, it's energy stocks, mining stocks, and so forth. So those are my thoughts today with the stock market news of the day, and I'll be talking with you later. If you like this video, click like so YouTube will know, people do like this content. There are people out there that want an objective opinion. They just don't want to hear Bitcoin technobabble, mean trading, and hype. They want to deal with the trends and the charts and align themselves with that. And if you are new and you want to get my next video, click the subscribe button that you see, the subscribe button on YouTube, then click the bell next to it, and then YouTube will send you an alert as soon as the next video is up.